Hello, everyone. It's very nice to see really a full house today. I'm very kindly pleased to see such a high number of people today. But yes, welcome. For those of you who don't know me, my name is Emils. I'm managing the Latvian Business Angels Network. And today we have a very interesting event planned for you. As usual, as our events are, they are split into two parts. First, we have a special guest, Jurijs, who will be sharing his, let's say, business experience, his journey, his insights, etc. So we'll be able to ask any questions, maybe get some unfiltered opinions or thoughts from him. And as well, we'll have 3 startup pitches for today. And interestingly enough, 2 of those startups pitching today are actually our members. So it's interesting to see how investors are transitioning into startups as well. So it will be interesting to see that as well. But yeah, I mean, I previously, in mid of June, said that we will meet again after the World Cup. So I don't know how about you, but I'm really very pleased to see the results of it. So yeah, go Spain. But yeah, I guess now we can finally get some sleep in these months, in the coming days, where we don't have to watch football in midnight anymore. But yeah, before we get into the main agenda, we have a few announcements ourselves as well. The first being is that I kindly ask members to complete their investor profiles. I have sent out the survey. It's like a very short 30-second survey that you have to fill out. Please do it. This will help me very greatly. And it will also improve your experience in, let's say, matchmaking you with relevant startups for you as well. Also, we have completed our due diligence on one of the startups from our previous June event, Machinery, which is a heavy equipment dealer platform, management platform. Very honestly, we have done due diligence, talked to the team, analyzed them very carefully, and our opinion is very neutral. So we are very much seeking other investors' opinions and perspectives on the team and on them. We can provide you with any information about them. We have the full due diligence documentation package ready. So we will be happy to engage with any other investor who might be interested in, let's say, providing another opinion on them as well. Also, one of the June startups was Ranon, a defense tech startup. We are nearing the end of the due diligence also with them. But yes, currently very promising team, very promising conversations up until now, but more details about them will follow very soon. Yes, also kind of a great announcement for our community as well. One of the most active Baltic venture capital funds, First Pick, have also become our corporate members. So this might also lead to some new, let's say, deal flow possibilities coming from Lithuania, or maybe some also new co-investment opportunities with them as well. And also, one of the announcements that was published, I think, at the start of the week is that we are running our angel training course again this autumn from 22nd September to 6th of October. We have 24 spots left. If anyone is interested in taking part in this course, feel free to register on our webpage. It's going to be a fantastic course with fantastic speakers. You can ask for any references from our previous editions. But yeah, very pleased to welcome any newcomers. And yeah, before I give the floor to Jurijs, just a quick note to those who are standing. Feel free to come to the first row. Don't be shy. And if you still cannot find a spot, you can take maybe another chair from the back of the room and make yourself comfortable. But yes, without further ado, I would like to give the floor to Jurijs, who can share about his personal business experience, investment experience, and maybe tell the story he has prepared for today. And we can give a round of applause in welcoming him. Yeah.
Thank you. Good evening, everyone. I'll try to move so that I'm not blinded by the lights. Well, first of all, thank you for inviting and having me here tonight. To be honest, I was a bit surprised to be invited here because I'm probably not a very conventional speaker at a startups event. I've never built a unicorn. I don't own a unicorn. I've never built anything that's groundbreaking, innovative. I didn't build any AI business. What I do is pretty boring stuff. I do agriculture and I do banking. Some of my friends call me farmer, and I am a farmer, so I do chicken farming. I guess probably I'll spend a few minutes describing how I got there, share a few lessons, and then I would prefer to spend majority of the time answering your questions, because as I understand, most of you are either investors or are running your own startups. So I would rather spend most of time answering your questions. So my journey to become a business owner was probably quite unconventional. My first job, a proper job, was at the government. I spent a few years at the government treasury, working at the Ministry of Finance. And working there, I've never imagined I would end up, being a business owner, not even to say bank owner later on. But those 4 years that I spent at the Ministry of Finance, I think now looking back, were quite instrumental in my career, because they gave me two things. First of all, to have a very proper macro look, at what's happening in the economy, and they also helped me to understand how the government sector works. And it's quite a specific animal, as you know, and especially if you own a business, you interact with government agencies. It's actually quite a valuable skill set to understand how government agencies operate. From then I moved to London, spent a few years working for European Bank for Reconstruction and Development, and that was quite an interesting part of my life, because that's basically when I also decided to pursue studies at London Business School, and basically realized that M&As and private equity is something that I really like, and I see myself going forward. And then from then on, I spent a few years working in the banking industry, and that's sort of how my career progressed, and eventually drove me towards owning a bank. My first big banking project was Parax Bank at the time when it was taken over by the government, and EBRD also was one of the shareholders. That project was quite complex. It was quite a separate story about the leadership challenges there, but it also helped me to propel to a different scale of corporate businesses. From there, I was headhunted to Moscow to work for a very large Russian financial industrial group, and from there, basically those 3 years in Moscow was a time when I realized that it's enough working for somebody. That it's probably time to start doing something on my own. And now in the hindsight, it's fair to say that my first business was a failure. I did not make any money. I actually lost money. I lost quite a bit. So it was a sort of fairly expensive MBA for me, much more expensive than if I would go to Harvard. I lost substantially more money. The business I was trying to build at the time, we were trying, together with my partner, it was a 50-50 partnership, we were trying to build a first private equity house that would be focused specifically on distressed assets. The idea was very nice. Nobody ever done it before in Russia and CIS, but the timing was fundamentally wrong. We were raising monies from Western investors. It was 2014, end of 2014. It coincided, unfortunately, with the time when Russia invaded Crimea, and I still recall it to this day when I was pitching in London, one of the private equity funds in Mayfair. It was good meeting. We presented very beautiful pitch, and then the partner of that fund he said to me, "Yuri, you're a very nice guy, but we're not giving you any money because the whole Russia is one big special situation now." And at that time, me and my partner, we had a fairly large team, 25 people. Basically, that firm was living off my savings and my partner's savings. We had very expensive office in the central Moscow. And because of the geopolitics, we had to quickly think how to transform the business, because the payroll was very high. We had very high caliber people who actually left together with us from a large corporate structure. And when you have an expensive team, 20 plus of them, all of them having families, mortgages, you feel responsible. And I still remember to this day, it was quite on a few occasions, because financially the business was not performing. Me and my partner, we'd have to go in our office building. We'd have to go downstairs to ATM, take the cash out, from my personal account, and distribute it as a salary, to our employees. So it was that bad. And eventually, eventually we've managed sort of to make it break even. We've become a subcontractor of McKinsey & Co. In Russia, so we're taking restructuring mandates from them. But then, it was still obvious that it can only make enough money to cover the office bills and the payroll, and there was not any money left for the shareholders. So we took a decision to shut down the business, and that was my first entrepreneurial experience. It cost me a lot. It cost me like 7-digit number. So it was quite an expensive MBA, as I said. Today I have two businesses. So as Emil said at the outset, I'm a farmer / banker. So most of my professional career before was in the finance industry. So it was kind of obvious dream. I think there is not a single banker or a bank manager who is not dreaming to become a bank owner. So I sort of fulfilled that dream of mine. And Industrial Bank today is a niche bank, you can say, focusing on SMEs. So the business model is very simple. We do daily banking and asset-backed lending, nothing else. And the bank is growing quite steadily for a few years in a row. I think we are among top 3, top 5 best performing banks in the region in terms of return on equity. Last year we grew our loan book by 60%. I think this year we are on track to show 70% growth. So the bank is growing very steadily. My second business, which is, to be frank, much more dear to my heart, is farming, agriculture. Again, the business model is very simple. We produce eggs and egg products. And that business I'm even more proud of, because we have turned around a poultry factory, which is actually the eldest poultry factory in Latvia. This year we celebrate 65 years anniversary. It was a facility which was completely abandoned. Nobody wanted it. So we have taken over, we have modernized it, launched it. First year when we started, our annual revenue was about 2 million euros. Fast forward 10 years, this year we are on track to have a revenue of 60 plus million euros. So 30 times X for agriculture business in 10 years, I think it's not bad. I don't know how IT startups perform, so you tell me later, but you can do good growth in agriculture as well. I mean, obviously it was quite a bumpy ride, and I think my business learning, obviously as any business owner, I did quite a few mistakes, but I think also what protected me from perhaps making less mistakes than I would otherwise make is that my prior banking career, when I was a hired gun, when I worked in a corporate banking world, I was working more on the side of loan recovery, loan collection, and restructurings. And when you work there, you are basically dealing with failed businesses, and that sort of gives you a totally different perspective, because it's not super difficult to issue loans, to throw money after people, but it's much more difficult to collect it, and then to go and analyze either this particular borrower is worse revitalizing? Is it worth an effort, trying to help him to turn around, or it's better to repossess the business, sell it off? And one of the lessons I learned from that is that well, it's probably not really applicable to very large corporates, but for small and middle-sized businesses, I think it's very true, and I also have seen it in my businesses, that things start to go off track when founder or owner tries to walk away. Tries to walk away prematurely, or believes business is doing well. I can live somewhere in the Mediterranean. Management will take care of it. No, it doesn't work that way. Probably fair to say that 70% of the legal recovery or loan restructuring cases I've seen in my corporate lives were exactly for the reason when the founder believes he or she can step back and management will take care of everything. Sure.
I mean, you're managing two businesses, two large businesses, the egg one and the bank one. Are you planning to step away from one or the other?
In the bank, I think I stepped down, so I'm non-executive chairman. So I don't do micromanagement, and it's a regulated business. You cannot really micromanage a bank being non-executive chairman. But we have a very strong team. At the beginning, it was not like that, because actually, what's also worthwhile to mention, both of my businesses now that I own, they were non-performing assets when I took over. So there has been quite a bit of turnaround work done by myself and my teams. So basically, I stepped back, when the turnaround project was completed, and we then recruited for the bank. We recruited a totally different team with a different skill set, because when you come in to clean somebody else's shit, it's one skill set. When that part of the job is done and you need somebody to do business development, that's a different skill set. And in most cases, these are different people. It's quite rare to find somebody who has both. So I did step down. It was a painful process, and it was not easy. So now I show up in the bank maybe 2-3 times a month for the board meetings. They call me up when there is a meeting with a large client or complicated transaction. Some clients, and I'm sure it's true for any business, some relationships, they want to see the other shareholder. They don't want to deal with managers. So when they ask, I come in, but daily the bank is managed by the managing board. But going back to the lessons, if I may say so, from the business owner perspectives, and I guess I learned most of them the hard way. One was that you should not be afraid to surround yourself with people that are smarter than you. I think it, sometimes, especially I guess when I was young, it was sort of a bit counterintuitive, because I was afraid of competition. But later on in life, I realized that especially if it's your business, you own it. You actually need to look around for talent and for people who are much smarter than you are, because it will help to grow the business. Number two, and it's probably even more important than number one, is choose your partners very wisely, because it's like getting married, and you can actually argue which divorce is easier, to divorce your wife or divorce your business partner. Both can be super painful and super costly. Like super costly. Next one, obviously it probably depends on the size of the business, but what I also learned the hard way is you better have SHA, shareholder agreement. Things are great when they are great. Life is good when everything is good, when you're friends. But I've seen it, in my businesses. Also, when I was a hired manager in corporate world, that cheap lawyer today means very expensive litigation tomorrow. So you better have a proper shareholder agreement, especially if the business that you are developing is something you truly believe in. You believe this is to be your lifetime project. So better, invest a bit of money, have a proper shareholder agreement. Next is, and I also learned hard way, is trust your intuition more. There was a point in growing my businesses when I felt that I have surrounded myself, with bright minds. I started to ignore my intuition. So, you have this smart brains in the boardroom who convince you, with different scenarios, analytics, that, this and that, we should do that. And you feel with your gut, this is wrong. But, your management is convincing, yes, we should do this, look at these numbers and that. In 90% of the cases, when I did not listen to my intuition, it failed me. The decision was wrong and it cost me extra money. I actually, there was a point in my business career when I promised myself that, this year I'll trust, my teams more. I will not try to impose my decisions, so I will listen to them. And that year was probably the worst year financially for me. So, yeah, so basically that was my takeaway, that you in most cases, especially, if you're a business owner, that's your industry, you know it very well, trust yourself. Like in my situation, 90% of the cases, my intuition was right. Since many of you are business owners and investors, probably I should also say a few words on my take, with respect to fundraising. So as I said, I've never raised millions from a PowerPoint presentation pitch, but as a banker, we sort of give loans quite often, and I think the logic that is applied by the banks is in many ways similar as if any startup entrepreneur would pitch for a venture capital fund, and that's also that I communicate to my bank managers all the time that Excel can tolerate anything, but at the end of the day you give money to people. You give money to a specific individual, and for me, that is the key. Like every time, we sit at the board, we go through, loan applications, and my management teams, they know I will ask this question. I will ask, who has met this guy? Have you collected references? What's his track record? Has he ever, screwed anybody? Does he always repair his loans or not? And we actually had it on quite a few cases at the Industrial Bank that, the management would bring, a very nice proposal. It looks great on paper, collateral is good, loan to value is good, interest rate is high, but then me or my partners would say, no, I know this guy, he's an asshole, he doesn't pay his bills, we're not doing business with him. So, and I think that's quite important, that regardless, is it an investment fund or a bank, you always give money to a person, you don't give it to Excel spreadsheet. So why this is important? Reputation is important, and whatever you do, regardless, are you a hard manager, professional, or a business owner, your reputation compounds, and I'm sure you know it very well. You can fail only once, and then your reputation is ruined, and it's very difficult to restore it. Second thing that I've learned, and I also value very highly when people come for loans, when they ask for money, is try not to overpromise. It's better to underpromise and then overdeliver, as opposed to try to draw a very beautiful picture and then you fuck up, you fail. Then it's really bad. So it's better, be realistic, be modest, and try to sell your project, without overpromising. That's much better to overperform later. And also number 3, which is super important for the banks, I would assume equally important for VC capitalists, is cash flow. The path to cash, has to be very clear. And because at the end of the day, everybody wants their money back. I get every day like tens of messages in LinkedIn, people sending me different pitches. I don't even open them. No, I only, as an investor, but I promised myself I don't invest in anything else other than my 2 projects. But I only sort of meet somebody when sort of a very good close of mine, or a person I truly respect, calls me and says, "Well, Yuri, this is a great guy. This is a great project. Let's meet him together." Then I do that, because most of the investors, bankers, VC funds, and again, I'm sure you know it. They're getting like tens of funding applications, requests, emails every day. Yeah. I'll probably stop here, and I'll be willing to take as many questions as much time we have left. So ask anything. Finance, strategy, people, whatever.
Yeah, I have a question. How do you balance when it comes to making decisions between your gut and data? Because data shows one way and gut says the other way. So how do you balance it out? It's because data shows it's working.
Oh, I mean, obviously, I would not take it to the extremes, right? If financial model, shows that return on equity is like super low, I mean, obviously you don't go ahead. I probably more refer to sort of some strategic directions or tactical moves, more with that respect, and obviously it cannot be you cannot be completely delusional. Obviously you trust your gut. When you are confident that you know this industry, you know this market. If I would I don't know, decide I want to do AI startup in Singapore, I know nothing about Singapore, I know nothing about AI, so I would not trust my intuition there. So I was referring to to the industry in which you feel confident and you have some experience and you understand your market.
Did you know chickens and eggs before you pivoted from banking?
To be honest, I did. I was actually born and raised in the countryside, in the family of agronomists. My father, he's 80 years old. He's still professor of agriculture at university. So he's agronomist by training. My mother is agronomist by training. My brother is agronomist by training. And we lived in the countryside, so it was in Soviet times, and we had quite a bit of cattle and chickens. So I knew the stuff. And that was the reason I was so desperate to escape from the village, which I did. But then in these, 20 years later, destiny found me. And I'm doing agriculture.
Yes.
Sorry, I had a question about private equity. So I hear a lot of people from private equity say that the CIS region is undervalued. So there's a lot of distressed businesses, the one you were trying to build in Moscow, right? They fail. So why do you think they fail in our region? Like, we wouldn't say our region, but the whole society overall, because as you told about the loans, you only give loans to people, right? And so I don't think in Western society they have this, right? Or am I wrong?
You are not wrong. So I think there are 2 questions in your question. So on the distressed private equity bit, that particular business I was trying to build in 2014, I think it did not take off exactly because of geopolitics. Because in terms of the pipeline, soft commitments from large institutional investors were there, and we were raising $500 million fund at the time, and it looked very promising. So it's only Russia's invasion in Crimea it destroyed the business idea. Here in the Baltics and Eastern Europe at large, I also don't think we have a proper sort of distressed asset focused institutional investors. I think the reason for that is simply the size of our market and size of our region, because you have it in US, in UK, you have it. So you have a bunch of PE houses who have dedicated teams that do only distressed asset investing. So I think it's more of a size of the market that's lacking. On your second question, with respect to the that we give loans to people, banks in Western Europe, for example, don't. I think the same is true also for larger banks here. because my bank it's a very small bank. We do small loans. For us, sweet spot is between 2 to 6 million euros. For one client. But if you would go to any big Scandinavian or American bank in here, it would be different. It will be sort of less, how to put it politely, people-centric. It will be sort of more, following criteria and the processes.
Yeah, Carlos.
Your opinion on 50-50 partnerships?
Good question.
I like them much more than having 3 or 4 shareholders. So my first business was 50-50, and I also had a business which I exited last year, which was also 50-50. It works very well when partners complement each other, I think. It works very well when there is no competition between the partners. In one of my projects, unfortunately, I had this competition with the partner. But overall, so if I would have an option to do a business 50-50 or having 4, 5, 6 projects partners, I would do 50-50.
Actually, a question from the online audience, or was someone was asking. You said about you don't invest in like exotic technologies, etc. But for your own business, what do you think are the implications of like the AI solutions provided for it? Are you like very open to them, or is it like your own personal thesis kind of blocking from, I don't know, them helping you?
No, the fact that I don't invest in AI startups does not mean that we're not implementing all the popular stuff now. If anything, actually, I think we might be at the frontier. Actually, we are close to completing introducing AI engine for the whole Agrova group, which I think will be something very very cool and nobody else has done before. So we'll have all our production data, financial data, forecasting models, all powered by one AI. We'll see, all our multiple sites across different geographies. So we're doing that at Agrova. In the bank, it's a bit more complicated because of regulations, because of the privacy data protections. So, we do quite a bit, just for back office work. But when it comes to working with client data because of regulations, it's a bit tricky.
Jurijs?
Yeah, I actually had 2 questions. First one, you had a big corporate career, from what you said, and obviously running your own business, and I would imagine a bank is a whole different story in terms of risks, etc. What is it you took from the corporate career that helped you to succeed in the entrepreneurial world?
Probably 2 key lessons. Number 1, when I was sort of at the peak of my corporate career in Moscow, I used to work for a gentleman who was one of the wealthiest people in Russia, and quite often he would just call me up, take me out of important meeting, ask to come up. In Moscow it was quite popular those days that you have sort of upper floor in the building reserved for the shareholder. Then next level you have like management team. Then it goes down. So his PA called me, would call me up. Mr. Popov wants to see you, and sometimes he could call me up, say 10 a.m. in the morning. When I have client meetings, investment committee, so he would call me up at 10 a.m. and I would spend the whole day with him, discussing projects. He would challenge me, challenge all my deals, trying to question every decision I make, and then he disappears for a month. And then he comes back, and he does this stuff again. And that was so irritating, and I felt so humiliated. And I was like, why is he doing this? He has this huge business, huge business empire. The guy was like top 5 in Russia. Wealthiest man. Like, why is he doing that? And at the board of directors, we have like super bright minds, from Rothschild, from US, from London's private equity houses. Like, why is he doing that? And I was, as a CEO of part of the group, I was probably in charge of like 40% of his assets. And only when I left corporate world and when I started to, be the business owner, I realized what he was doing and why he was doing that. Because I realized that, this guy, he feels super lonely. That we are playing with his money and he doesn't have anybody to go to. If I fail, I can go to the board, I can go to him, say, Sergey, we need another 200 million, can you inject equity? When it's your business, there is nobody you can go to. And that's why you also realize that, you can hire, brilliant management team, brilliant management board, and they will work hard, and I work hard. And I was like, why is he challenging me? Why is he doing that? But then when you become a business owner, you realize that your management, they would, you will have sleepless nights, because this is your baby, this is your life. Everything is at risk for you. Regardless of how good your management is, if business fails, they stand up, they send the CV elsewhere, they get a new job. But you are risking everything. So that sort of was a fundamental change of paradigm for me, and I only understood it when I started to own my business, when I started to pay salaries to my employees for my own savings. Only then I understood, why this guy was going, so deeply and was questioning so much of what I was doing. Second thing, I think having a proper corporate career before having your own business, I think is very helpful if your ambition is to build a very large business. Because I think it sort of disciplines you, it sort of teaches you how to build organization that structures and functions as a system. Because if you don't have this experience, yes, there are quite a few examples of people who never worked for anyone and they, became billionaires. But hey, how many can you name? 5, 10, 20, out of billions people in this world. So that's like very unique. But if you are speaking of, not like super billionaires, but, just wealthy people who build businesses, well, I would argue that most of them had some sort of corporate career before, because it gives you, the skill set, the mindset that is required how to build a large organization that functions.
I have a follow-up, if I may. You mentioned that you closed a financial institution or bank, right? I think all of us have it when you have a project where you invest money and a lot of time. It's very hard to make a decision to close it fully. Like you will find 10 different ways of how to restructure that, etc., rather than just close it. So how did you make the decision to close it rather than do?
How not to become a zombie company?
It's very painful, and there is no easy answer, because and it's also true that when it comes to taking painful decisions, it's much easier to recommend those when you're a consultant, when you're an advisor, when you're an owner, when you own this thing and you created it. It's I hear what you say. It's much harder. For us, it's sort of also for that business that me and my partner decided to close. There was a trigger point which helped us because so we were not able to build a proper investment firm that we wanted, but we built a fairly successful restructuring advisory firm, and it just coincided that I was offered a job to become CEO of a very large sort of bad bank project, which also guaranteed recruitment for my entire team. So we just moved in-house to join a very large financial institution. So it helped. But also perhaps on a slightly different note, you just run your numbers, and also about 2 years ago, I used to have also some other investments which were eating my time, and I was looking at different startups, and I was meeting many people. I was thinking to diversify, but then I realized that it's just my brain will explode, because once you start doing that, your core business, starts to go down. And at that point in time, I decided that, okay, I have two businesses that I love, agriculture and bank. So I divest from anything else, and I focus only on these two businesses. And the moment I did that, we started to grow very quickly.
We have time for 2 or 3 more questions. Yes?
Yeah, I'm co-founder at 123 Industry. We launched a steel fabrication company last summer, and we actually went to industry and we were rejected the credit line, but we went with Swedbank instead. But anyway, so now just this month we finished to build you in August the new farm with Adamovičs. So what I'm interested in is you are you're running an agricultural business where in times when it seems that nobody is no longer interested in agriculture, us doing industrial business as well. How do you manage to make this business sexy again? And is it a big thing in your company? Because it seems that you are kind of successful in this in that time.
Well, the honest answer is probably one of the reasons I'm in this industry is precisely because so many people find it totally unsexy. And that's why we decided that we invest heavily and we do M&As. So now as we speak, we are working on a 30 million investment program in Aluksne. So we're gonna substantially increase further our capacity. And actually we are also doing the same in UK. We have 23 farms in England right now, and we are building 3 more. Plan to build more. We're looking at some M&A targets also. And I think sometimes the key is exactly as you said, find an industry which other people believe is like totally unsexy. In terms of investment, our industry is very capital heavy. It's very capex heavy. You need to invest a lot. Payback periods are long. So there is no quick flip. There is no easy money, and agriculture is linked to commodity prices, so it's very cyclical. In some years you make good money, in some years you make nothing, or you might lose. But my belief also is that because this is a primary agriculture, and the product that we produce, this is the cheapest source of animal protein. Regardless is it peace or war, people would want to eat. And also in terms of macro fundamentals, it's also an interesting industry because population is rising, and consumption of animal protein will only continue to grow. Plus, what I also feel that was also quite interesting, like when I started in this industry, and then also during last 5-6 years, you would not see institutional private equity doing any deals in our industry. Now they do. Why? Because big private equity is simply running out of industries in which consolidation did not happen. So my industry is one of the very few left where there is still substantial potential for consolidation. And in our industry, you don't have many, like most of the poultry factory, poultry farm owners were like simple folks, like farmers who do the farming. So you probably would not see many farmers like myself, who are like flying around, looking for M&A targets. There are few, 4 or 5 I know with whom we are competing on possible M&A deals. But our ambition is to build a very sizable agriculture business.
One last question, Ants.
Adamovičs is one of very few companies in Latvia who have done IPO. So how is this experience with you? Would you do more capital raise like that, and are you satisfied with the result?
If I'm satisfied with the result of IPO, looking a few years back, yes, I'm satisfied, because we achieved what we wanted at that time. Am I satisfied now, with the way market is performing and stock is performing? No, I'm not. because the company is undervalued. But that's not our problem. That's the problem all issuers here at Nasdaq Baltic face, that the market is simply illiquid, and that's also one of the reasons when we started to work on our first M&A deals, we're thinking to raise money through secondary placement again. But we actually did spoke to we have 2 pension funds amongst our shareholder base, so I did actually went and spoke to them, and it was clear that there is zero appetite. And this is basically then what prompted me to restructure the group and establish Agrova International, which is our new holdco, and which is acquiring then businesses in other geographies. Will we go to markets again? Most likely, yes. We actually we were supposed to go to public bond markets this spring. We have the prospectus approved by the Bank of Latvia, but we decided not to do so just yet because we received very interesting offers from large commercial banks. So we're currently working on that. But I do not exclude that we'll return to capital markets both. So we're actually thinking that perhaps for future M&As we can raise international bonds. I'm not sure it will be in Latvia, most likely not, because simply because of the depth and the size of the market. And also when we did the UK acquisition, we also now have a private equity fund as one of our investors, Accession Capital Partners. That's a Vienna-based fund. They own 23% of the group. And one of the exit options they're considering is that we might list Agrova International like 5 years later. But there is lots of work to be done before that.
All right. Thank you very much.